Markets are pausing, traders are waiting, and the next two signals could set the tone for everything that follows. US stocks are in a holding pattern right now, as Wall Street braces for two of the most closely watched events in any given month, the jobs report and the start of corporate earnings season. Neither has landed yet, and that uncertainty is keeping investors cautious. The jobs report, officially called the non-farm payrolls report, tells the market how many jobs the US economy added in the prior month. It also comes with the unemployment rate and a read on wage growth. Those three numbers carry a lot of weight. When hiring is strong and wages are climbing, it signals an economy running hot. That typically pushes the Federal Reserve to keep interest rates elevated. When the numbers come in soft, it raises the possibility the Fed has room to ease off, and markets tend to respond accordingly. The Federal Reserve has been clear. It wants more evidence that inflation is under control before cutting rates further. Inflation has cooled significantly from its peaks, but it has not yet returned to the Fed's 2% target. So the jobs report lands in a market that is sensitive to any signal that tips the balance one way or the other. Bond markets will be watching just as closely as stock traders. A stronger than expected payrolls number tends to push Treasury yields higher because it reduces the odds of near-term rate cuts. And higher yields put pressure on stock valuations, especially for growth-oriented companies. When interest rates are elevated, the future earnings those companies are priced on become less attractive to investors today. Then there is earnings season. When major companies report their quarterly results, investors get a ground-level view of how the economy is actually holding up. Are consumers still spending? Are profit margins getting squeezed? Are executives confident enough to invest and hire? The headline numbers matter, but so does what company leaders say about the months ahead. Weak guidance, even when current results look solid, can weigh on stock prices. Together, these two events give the market something concrete to trade on after a stretch of uncertainty. Right now, traders are essentially marking time, waiting for data that could either confirm the economy is holding up well or raise fresh concerns about where growth is headed. The practical takeaway: pay attention to not just the top-line jobs number when it drops, but also wage growth and the unemployment rate. And when earnings results start rolling in, listen to what executives say about the outlook, not just what they report about the past quarter. This briefing is brought to you by First Financial News. Clear daily coverage of the economy and markets at firstfinancialnews.com.